Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for May 2nd, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We continue to hold up here at these highs, and we're holding right between our two key levels, 76.5 and 88.75. I've mentioned before, the overall move and trend has been to the upside. At some point, we're going to see significant continuation, and that opens up above 2400. Above 2400 opens up 2424 and 2460 as the next upside targets. So we're looking to see, do these late bulls up here get paid at the moment, right? Typically speaking, when you're at the top of a range here and you have late bulls that come into play, if they don't get paid above the recent highs here, the stops could come out and you could see a rotation back against the range. It would still offer an opportunity to buy on a longer term basis for a likely continuation through recent highs and into those upside targets. So we have to see, do they get paid? 76.5 is the key level. I wouldn't be looking to really sell here. What I'd be looking for is, do prices fail to hold 76.5? Because if they do, then there would be a continuation to these lows that you could play. But as of right now, you have to be very, very careful trying to sell at these highs because the market has been very, very bullish. Above 24.95 in that zone starts to squeeze and test 2400, and again, that could lead to a squeeze. So right now we're kind of in the range, and we do have FOMC statement and meeting tomorrow, and that's going to be very important. And we also have NFP later on this week in addition to the French election. So we have a lot of information, data points coming out, and that will help influence whether we see expansion one way or another. But either way, the overall trend has been to the upside. Even if we do rotate lower, I still believe it's a fantastic buying opportunity for a continuation to new highs at some point. So we're going to continue to watch this range. And in the short term, fading the edges is still the best opportunity at the moment, and that's when you're looking down in the intraday time frame. So dropping to the intraday time frame again, these edges still provide the best path to fading at the moment. So 77, 76 half down here. 88, 75 has been a great edge so far. But for the most part, it's looking to the edges. You know, coming up here to 91 and failing would open up a return to 85 half. Coming down here to 80 or perhaps even as low as 75s. But right now 80 in that zone, 81, would provide an opportunity to fade it back to 86. But until expansion occurs, that's kind of the play right now. All right, let's take a look at crude oil. Crude oil here, if we take a look at the higher time frame, for the most part, I mentioned in the previous session that I'd be cautious of a test of 48.80 this time around compared to Friday. And as we watched it, the order flow, watched the footprint, watched the visual dome, all of that just showed that at the moment those aggressive sellers were hitting the bid and dropping through those, sweeping those bids that were sitting there. You know, it was just very, very clear that there was no buying that was going to happen just yet off that zone. And so, typically speaking, when the market's moving lower and you're failing new highs time and time again, that's an indication of more weakness. So right now, keep an eye on the previous week's close here. That's currently where bears are defending. Any failure to hold 48.42 opens up a move, perhaps down into 47.10. At the moment, we're seeing, after this move down, we're seeing this thing jiggle back and forth. It doesn't make for great intraday trading either. So right now, we're kind of stuck on a swing and intraday basis. So you have to be very careful and just play the edges at the moment. I still think there's a little bit more short-term down, and then we'll see if the bulls can reject lower lows or perhaps the bottom of the key range for a shot at higher prices. So right now, very difficult to engage at the moment, but the previous week's close is very important. So looking at the intraday time frame here, you'll see right here, that's the previous close, 49.19. That's a very important level. That's where bears are currently positioned. Now here's the 48.80, and one thing that you do see this morning is right here. That's an overnight trading where price drops below the previous session's low here and immediately pushed back above the close. Pullback to the close has been defended, and now you have an upward sloping VWAP. So right now, in the short term, heading into RTH, this thing has been trending a little higher. If price can push above 49.30, there's an opportunity to continue a little bit higher. Not much higher, but at least get back into 49.60 perhaps, 49.70, and then from there you could see some sort of rejection. That's about where prices get above this recent high here, and if there's any failure, it may come back at the moment. So right now it's kind of fade the edges. Short-term uptrend at the moment, but overall this thing has had a heck of a time trying to push the new highs. Every new high has been rejected so far, and that usually leads to more weakness, and that could spark a return. So any failure to hold up here, any of these recent highs could offer a return back toward 49s, which is 5-day and 1-day VPOC, and perhaps a retest of 48.80. So right now, got to be cautious in crude oil. Hasn't been the best overall in the last day or two. Now if we take a look at gold, here's a look at gold. The higher time frame right now shows right here that we were looking to defend 63s for the last week, and while bulls have done that and have gotten paid, Monday morning pre-market, I mentioned it's probably time to look to run those stops of those bulls that have been defending, because those bulls, while they have been defending, they really haven't gotten paid, at least not on a multi-day basis. So the stops start to come out, and it was a good call because immediately price started to push through 63s, and it dropped hard back toward 57, 50, 52, almost getting toward 52 here. Let's see, we're at 53 now. So it's been a quick push downward, and what I mentioned was any failure to hold 63 opens up 50, which is now composite VPOC, and then a retest of 1240. If you were part of our PivotBoss monthly market outlook yesterday afternoon, then you know that in gold, what I mentioned was we do have a nice upward sloping channel here that's in play, and 1240 is about where it's at. That's our key level. It's just below composite VPOC. So if we drop down into 1240, there could be some development down here that plays out over several days, and that could lead to a squeeze at some point here down the road, and that squeeze could finally get us above 1300. So 1240 is going to be the level I watch here to see if any bulls come in to defend. If there's rejection or some sort of holding pattern like this where bulls come in and squeeze those late bears, that's going to be the pattern to look for again for another round of strength. So 1240 could be the short-term target ahead, and also the area to watch for a trap and squeeze. On an intraday basis, you'll notice 1263 again was very significant, and what really sparked it all was a rejection of the previous week's close. So it held above the previous week's close when offered, held on 63s, rallied into the previous close, and boom, that's when it broke through 63s and continued downward toward 55. Now we're sitting down here. So this LVN is very important. Any bounce into that LVN, especially into 63s, offers an opportunity for bears to defend for a continuation lower. So right now, if any rotation comes into 59, 60 or higher, it could be a great opportunity to watch for a trap and a long liquidation lower toward 50 and 40. Lastly, let's take a look at the NQ. The NQ has been quite bullish. I mentioned before that this thing has gotten the upside expansion, has pushed higher very strongly, has reached our 5602 target. That's the target we gave at the beginning of April. So here in April, I mentioned that the next upside target is 5602. I mentioned that at our previous monthly market outlook. And this time around, I mentioned watch the next upside pivot here. That's going to be 5661. And that's the R25 for the month. So that's the monthly R25 pivot on the PivotBoss pivots. And anytime you have a steady rally here, this is the previous month's low, this is the previous month's high. It was straight up from that low. When you have that, there's a tendency here to fade off the 25% pivot, at least on a first test basis. I'm not advising that you sell the NQ. What I am advising is if there is rejection there, you could see a pullback, and that could offer an opportunity to get back in and continue to see this thing stretch. Overall, if you look at the profile, you can see it's a nice built-out profile here when it was in a range, and now it's gotten the first move up, and it's very thinly traded here. That usually doesn't last for long. Usually you have to come back and retrade it and build it out, and retrade it again and build it out in order to start developing that beautiful balanced shaped profile. So Having said that, if price does rotate any length, even as far down as the 54.75s, that provides a fantastic opportunity to buy and squeeze yet again for the next upside targets. So big time move yesterday on the first day of May. Now we'll have to see what happens at 56.61. If price breach into that zone, it could be a short-term fade back across the range, and then bulls look to pick it back up lower. So that's something to keep in mind on a longer-term basis. On an intraday basis right now, day after trend day, we had a fantastic trend day yesterday that really surprised me at least. But once price pushed through strong through the 56.10s and began to leave behind an LVN, that's when we shifted our tactics here. And you can see that bulls were able to defend and continue to squeeze. So day after trend day usually is a digestion day. So we could be looking at a very quiet fade the edges type of day here. And already you can see how narrow that range is so far today. So very quiet overnight range, not a whole lot of activity. That could continue to be the case. So these little edges here could be the edges that the market fades back and forth as the market digests the recent price move. So keep that in mind. All right, we do have Fed Chair Janet Yellen speaking later on this week. We have non-farm payrolls. We have the FOMC meeting minutes in addition to the Fed Fund interest rate decision. We have the French election this weekend. So we have a whole lot of different data points that are going to be coming out. That could lead to some quiet trading activity heading into those events, followed by some significant volatility afterwards. So we'll keep an eye on that. And lastly, if you were not a part of our training, rather our monthly market outlook, then you can go to pivotboss.com here. It's right on the billboard here. You can click on PivotBoss Monthly Outlook for May 1st, and the video is there. It's about an hour and a half, I believe, hour and 25 minutes or so. It's a pretty good length. We covered a range of topics, including the ES&Q, crude oil, gold, bonds, and we talked a lot of stocks, including Amazon, Tesla, and NVIDIA. So check it out. Let me know what you think. And that's all for now. Good luck, trade well, and I'll see you soon.